Good morning, everybody. Mike Vacchi, Princetontrader.com here with your Tuesday market webcast. Okay, so here we are again. Yet again. Weekly pivot in the 9-day. And I'm going to show you the hourly chart in a couple of minutes. And I've said this before, and I don't mind sounding like Charlie Brown and Lucy in the football, but here comes Charlie Brown, Lucy in the football. Wind it up, bud. The Bears have an excellent opportunity to convert these things. It actually looks better technically than it's looked the last couple of times. And so the premise of this whole discussion, it's been going back months now. We talked about it yesterday, talked about it last week, we talk about it now. Until the Bears can convert the green line, which is your 20-day simple moving average, the blue line, which is your 9-day. Every one of these dips gets bought, and we go to new all-time highs. The high of the moment is 53.33.5. The blue line is the same blue line as the other chart. It's the 9-day, okay? We've got to widen out a little bit here to see the green line. This is your 20-day, all right? And right here is your weekly pivot. So going back weeks, let's go back weeks. This chart goes back like 20 days. Like we don't need to do this ad nauseum, but the same shit's been happening basically since October. You see multiple opportunities here. See both lines get broken. They take it out, then they lose it. They make a higher low, and they take them up. Low, higher low, take it up. So on and so forth. So now, back to present day, let's zoom it in. Here we are. Here's your weekly pivot. Here's your 9-day. The reason I was saying I like it technically is because you had a spike failure, 5,375 yesterday. I just like to note for everybody that my runner from 53.10 half was holding a plus 10 stop. So right here was the part where Mike gets stopped out. Okay, I'm not angry or bitter at all. Just facts are facts. Anywho, the little spike high there, then they confirm weekly pivot resistance here. They open up lower. They don't really come back to it. Not off the Europe open, but the 4 o'clock hour, they spike it back up and test weekly pivot. Hold it again. So like I say, technically you've done a couple of things here. You've rejected the roundy at 5,300. You've held weekly pivot once and twice, and you follow that up by making a lower low versus the prior day. Okay? So what happened last week was we came down here, we tested the weekly pivot, we turned it into support. We didn't even get to the 9-day. That's here. And then we make the higher low. That was Tuesday. Higher low Wednesday, lift it up. Thursday, we just kind of grind, before the holiday. So what do the Bears need to do? We should not trade above 96 for the rest of the day. And if you can't, when we get back to this is why the shorts and the Bears can't have nice things. Because they can't hold simple resistance that they've confirmed and turned into lower lows. This is one of the better technical setups for them to actually get something done. Now, let's define getting something done, okay? Because I would imagine my definition of getting something done and your average perma-bear on Twitter's opinion of getting something done are radically different, okay? I'm not talking about the moon crashing into the earth. I'm not talking about everybody living in caves with gold flakes to pay for their food, okay? I'm not talking about a lot of the crazy technical scenarios that get thrown out when people are just talking their book because they've been, they've had puts forever, and 1 out of 10 days is a good day. Okay? Here's my idea of getting something done. All right? The Bears have a genuine opportunity, if they can hold this and break this, to come down and test the green line from that daily chart. Okay? The middle Bollinger Band, the 20-day simple moving average. You have a brand new monthly pivot here at 52.50 that needs a look. You've got the 20-day simple, and you've got the pre-FOMC price. Okay? That's the price immediately preceding the last FOMC announcement, back a couple of weeks ago. Testing 36 to 50 and consolidating down here again to make another decision is not an unreasonable situation. But Mike, that's only 40 handles from here. I know. But every time we do one of these, they bounce it like one of those 10-cent balls that your parents would buy you, and you bounce it one time off the driveway and would go 4 neighborhoods over and you never see it again. So until that stops happening, you're not going to convert anything like the green line. Now the baseline assumption all the time is, and this is whether you're talking about, this is for anybody that's new, whether you're talking about an index, a commodity, a stock, anything that's got Bollinger Bands on it. If it wants to trade above the middle band and the upper band, that's a buy dips tape. And this right here is your classic buy dips tape on a daily chart. Conversely, if you're running into something that wants to trade between the middle band and the lower band, which we saw ad infinitum during COVID, that is a sell rallies tape. That's where the shorts always want to get to. It's not about throwing it off a cliff. It's about bounces being controlled and turned into lower lows. It's about, in the upside, it's about dips being controlled and turned into higher highs. Trend up, trend down, whatever. If the bears want that dynamic, that conversation starts right there at the green line. Right at the green line. So when they get down there, kind of like back here, when they get down there, they can't run out of gas. Boing, take a breath, and boing, bye. Then all of a sudden you wake up and you're 100 handles away from the green line. So it'll be very interesting if they can execute on the technical stuff, get down into that 36 to 50 zone, and that middle area is 44. If they can get down there, whether they can do more with it than they have in months going on years. So it'll be a very interesting day today. They put themselves in a good spot. If you're the bulls, what do you need to do? Stop screwing up at 5,300 and 5,296. You need to close today with 53s on it, because every day that this goes, every day this lasts, every day below 5,300 is a bigger excuse to test these areas. Okay, that's all I got. Everybody have a fantastic day. Be safe, be healthy, take care, trade them well. Come check us out. Come learn how to trade this stuff. Let us help you. Let us serve you. It's a great group of people. We can make you a better trader. We can make you a more risk-focused, consistent trader. And that's the key to building an account. Risk focus, consistency, having a plan. All right, take care. Talk to everybody tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.